G'day folks, welcome back to Pete's Investing. It's March the 12th, 2024. This is natural gas price analysis. Now we're also still in a bearish move, but just watch for any Fibonacci retrace, that still applies. And I'll go through some scenarios for you. We're also including some arrows or indicator which we've added recently in a description below, which helps identify tops and bottoms and also a trading idea, so stay tuned to the end for that. In terms of short-term analysis, there was something on FX Empire I found, and this is another analyst's viewpoint, not mine. So the analyst from FX Empire suggests natural gas is currently in an indecisive accumulation phase with support around 150. Shorting is considered risky at this point due to the recent significant price drop, while a long-term upside move is expected. It might be slow, potentially reaching $3 by year end. The analyst recommends using the $150 to $2 range as an entry point for a long-term swing trade using instruments like ETFs, UNG, which we'll cover as well, to avoid currency exchange costs. So coming back to the natural gas price, we've got the weekly, daily and hourly, which is what we look at. And for those new to the channel, what we look at the bottom here, we've got the ADX 25, which is showing a bearish movement on both the weekly and the daily, and also the hourly. So that's one of our indicators. The other indicator we use is the CCI 150 with these moving average bands, and this is something I wrote up recently, and to get the idea or how to draw that or chart it on your software, there's a link in the description below which shows you the parameters for that. But you can see there we also use this as a trending tool but also as a divergence indicator, and by that I mean divergence. You can see there back on the weekly there was a bearish divergence on the highs on the CCI 150 versus higher highs on the price, and that indicated the price would drop off, and it did. There's currently no divergence on the weekly, but also as a trend, you'll notice the CCI 150 has come back and just almost kissing that moving average band. And what we do say is if it enters the moving average band, we don't take long or short positions. We only take positions when it's outside of this band. In this case, when it's below the band here, we take short positions only. So based on the weekly, it's short positions. Notice on the daily, it's broken down from a long positioning, so we would not have taken long or short trades at all if you were being very conservative. You can trade on the daily alone on the lower time frames, and I'll go through that in a few minutes. But also we did have a bullish divergence back here, higher lows on the CCI versus lower lows on the price, and it bounced off that support level at 158, which we drew some time ago. It came up and hit this minor resistance at 205, and it bounced down from there. So if we jump to the hourly chart, let me just blow this up. We did actually break down through this support line. You touched a few points there, and that was also in alignment with this bearish divergence. Again, lower highs on the CCI versus higher highs on the price. And if I draw these arrows, which again, the coding for that is in the description below to understand how to code it in your charting software. When it broke below this support line, then that was where you would have gone short, and our target would have been that close Fibonacci range. And that Fibonacci was drawn back from this low to that high, and that was a 23 to the 38% level. That's the closest range we choose as a target at all the time. You see here it actually broke below the 38 and actually bounced off that 50% previously, made a little bounce, and it's falling further. So where we are today, now this is the key area, the 61% is the key area to look out for. So what we'll do now is we'll put in just to give you another Fibonacci retracement. I like using Fibonacci retracements more than expansions, but just as a retracement level. You can see there when it bounced up, it hit the 38% level almost before bouncing down. Had it gone and broken up past the 61%, that would have been almost confirmation of a more bullish movement to the upside. But again, I like using these Fibonacci movements above or below the 61% in alignment with the CCI 150 and where it's heading. So you can see there at the moment, on the hourly, it's breaking to the downside, so more of a bearish outlook at the moment. Now, in terms of an expansion, let me draw Fibonacci expansion from that point down to that level. I'll just move it out there, up to that high. You can see there it's currently resting at just below the 38% level. Now, if we drew a trend line along these bottoms, and that would have been, actually let me just redraw that in case it's not accurate, and I'll delete that for the moment so we can see what we're doing. So at the moment also I just want to highlight these arrows. Again, coding for that is in the description below. It showed a little bit of a bounce there, which it did. And I like to see clusters. Single arrows are probably not as decisive. So when I see clusters, that gives me an idea that we're going to probably see a bounce. Here we're giving a continuation of long arrows, indicating a bounce, and that was in alignment with the divergence back here. So I like using these divergence in alignment with the arrows. So again, you can see there are a lot of bearish arrows, and eventually did break to the downside. So let me just draw that back there between those lows, those 2 points there, and then those lows there as well. So you can see there, we're sort of expecting it probably to bounce and at least bounce off this support line, this trend in line we've drawn. And you'll notice if it comes down and bounces near the 61%, that could be a target area. I'm not telling you to go short, I'm just giving you probability of price movement. And again, if I drew a Fibonacci expansion or extension down to that point and up to there, you can see there that 61% also coincides with this 61% retracement level. That could be a key area to look out for as a potential bounce, possibly. I'm not saying a full scale reversal, but at least possibly a bounce similar to what it did here. And again, I like using these CCI 150 trends to identify long or short positions. At the moment, the weekly is short, the daily is indecisive, it's broken into the band, and on the hourly, it's short or bearish. So I would avoid taking positions at the moment until we see the daily as well break below this point, this moving average band. So I'd like to see all three timelines aligned before taking a position, or long or short. At the moment, I'd be out of the market, not trading anything, but just in terms of probability of where it may land, I'm suggesting it may come down and possibly bounce off that 61% with those there. Next, we look at ProShares Ultra Short. That's BOIL, and I know a few of you guys are interested in this and trading it. I won't go through too much analysis on this, but just basically show you the overall trend and where it's going. You can see there the ADX is bearish on the weekly, bearish on the daily, and bearish on the hourly. The CCI 150 is showing a bullish divergence versus the price. You can see that very clearly. There's also bullish divergence on the daily versus the price. You can add a bit of a bounce. Now, we did draw this target area, and you can see that may have just touched it or hit it, possibly, and that could have been the end of that divergence, possibly. But notice the CCI is still rising, so there's always a chance of it to continue rising from that point. On the hourly, similar to the natural gas commodity price, it did break below this trend line and making further lows. So at the moment, I'd suggest bullish on the 150, indecisive on the daily, and bearish on that. So again, similar to the commodity price, indecisive at the moment. So don't take trades if that's depending on your strategy, of course. Next, we look at KOLD. Bullish on the ADX on the weekly, bullish on the daily, and bullish on the hourly. Now we've got the weekly CCI also bullish, no divergence. It's indecisive on the daily. We did have a bearish divergence here versus the price. It came down, hit our target, bounced off that 61%. Remember what I say always, that 61% is key. Bounce from there and making further highs from that point. And on the hourly, we did have a small bullish divergence there versus the price, and it bounced from there as well, and making new bullish movement on that as well. And lastly, we look at UNG. Again, zooming out on the weekly, on the ADX, bearish on the ADX there, on the daily bearish, and on the hourly bearish. Now, in terms of the CCI 150, it's touching that moving average band, so indecisive, although it is bullish divergence versus the price, so it may see a bounce from there. On the daily, it's a bullish divergence, also in the band, so indecisive in terms of trading, taking trades, but a bullish divergence, so we may see a bounce from there possibly. And on the hourly, similar to the commodity price, it broke below this support line and still bearish at the moment. So as a trading idea for those new to the channel, what I've got here is the daily chart, and we trade in the direction of the daily CCI 150. So at the moment, you would not be taking any trades, like I said. And preferably, if you want to be really conservative, I'd like to see the weekly and daily align in the same direction, and preferably even the monthly if you're really conservative on trading strategies. And over here, I've got a hourly chart. That's an average down approach, and the hourly chart on the stop loss approach. Now, in terms of the micro rule, we've got a couple of rules to follow. This is using the Heikin-Ashi on the price chart. So taking long trades when the Heikin-Ashi is green and short trades when the Heikin-Ashi is red. That's one of the rules. But the main rule is the trend of the CCI 150. So in this case, if the 150 is above this moving average band, we take long trades. Like I said, and when it's below the band, we take short trades. So here, for example, I've got a back test here. At the start of that point there, you can see on the weekly, when it broke above that band, you would have started taking long trades, and you would have stopped taking long trades when it broke within that band there. On that basis, the average down approach, you can see there it generated 6,785. It averaged down a few times there, three times it averaged down there, twice there, and twice there, or actually once there. So it generated 6,795 on the average down approach, and on the stop loss approach it generated 2,150. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.